Hey everyone, many of you know I have been investing in dividend stocks for over 20 years. Over all of those decades of investing, I have had a lot of successes, but I've also made some mistakes as well. In the video today, I want to share with all of you 10 tips that I personally follow as a dividend investor. Some of these tips, quite frankly, have been informed by mistakes I have made even in recent years. I'm always learning. That's part of the dividend stock investing journey, by the way. I don't think any of us ever stop learning on this journey. And I want to share these 10 tips with all of you in the video today because they have been instrumental for myself as a dividend stock investor as I work towards my goal of complete financial freedom. Get ready, everyone, for a really exciting dividend stock investing video. Welcome to PPC Ian. This is dividend stock investing for everyone. All right, everyone. So I'm so excited to get started with the video today. Many of you who have been around here on the channel since the early days probably remember I had my Stanford notebook. Today, instead of the Stanford notebook, I actually went with some of these Post-it notes. At least I'm paying respect here, paying homage here to 3M, which is a company that I personally own in my dividend stock portfolio that produces these Post-it notes. But I'm going to be reading off of these Post-it notes today. I just jotted down a few notes before the video, but let's get started. And so as you can see on the screen right now, tip number one that I follow as a dividend investor is basically focusing on dividends and not share price. We've all seen really recently how volatile the stock market can be. Those investors who are reliant on share price to reach any kind of financial goal, it can be quite stressful. It can be quite tumultuous. For myself, as a measure of my success as a stock market investor, I don't really look at my aggregate portfolio value. What I look at is my stream of income that's coming in from my dividends that I can actually use to pay bills, and I measure that stream over time. I think 2022 is the year that finally has underscored the importance of this tip for all kinds of investors out there who weren't even looking at dividends before, because dividends are very tangible. Despite where stocks are going, whether they're going up, whether they're going down, dividend income from world-class companies like Starbucks, for example, are quite reliable and tend to go up each and every year over time. And so I like to focus on that dividend income that's coming in as my measure of success. This is a rule I truly live by. I also want to share with all of you tip number two. Check it out on the screen right now. The next one that I want to go through is reinvesting dividends. One of my subscribers recently, I think it was over on Patreon. By the way, if you're not on Patreon yet, check out the pinned comment below. I will link to it. I have a Patreon where I share all of my stock trades, and on the corner patron tier, which is the higher level tier, I share my complete stock portfolio, my percentage allocation to each position. I have some bonus videos over there as well. But basically, a patron was asking, Ian, what do you do with dividend reinvestment these days? How do you look at it? And basically at a high level, I like to reinvest dividends and I like to hold on as long as I can, because it's very tempting as a dividend investor to just take those dividends and use them to pay bills. And to be honest, I'm doing that with some of my stocks right now, but it's usually the less important stocks. It's the smaller stocks. It's the stocks in the portfolio, quite frankly, that I could probably do without. And I'm taking some some of those dividends and I'm using them to pay bills right now because I'm further along in my career, in my journey as a dividend investor. But overall, as a rule to live by, as a tip that I try to follow each and every day, I like to reinvest my dividends. And generally speaking, I like to have a portfolio where I can reinvest the dividends back into the stock that paid the dividend. Because basically with a stock like Johnson & Johnson or Starbucks, quite frankly, at any price, I generally feel comfortable reinvesting the dividend. But let's say I had stocks where the dividends are coming in and I don't feel comfortable reinvesting into that company. I honestly have a few of them. To be honest, Caterpillar, for example, is one of them. And the reason I don't reinvest into Caterpillar is it's very highly valued. It's not a really strategic priority of mine going forward. And so I don't reinvest in that company. There's always exceptions. But as a rule, as a tip to live by, I like to structure a portfolio where I own the kinds of stocks that I feel comfortable reinvesting at any price. Because I know if I feel comfortable reinvesting at any price, the stocks that I own are the right stocks for me. If I have stocks in my portfolio where I don't really want to reinvest back into that company, sometimes it happens, like a Caterpillar, or another example is Hawaiian Electric. I just have too much allocation in that company, so I don't reinvest as a way of rebalancing because I never sell stocks. And so there's always these corner cases. But what I'm saying in general, I know I've done my job as a stock picker, as a dividend stock portfolio analyst, as someone who's constructing a world-class portfolio. I know I've done my job when I feel comfortable reinvesting at almost any price. What I would also say is I like to resist the temptation to take the dividends. I like to reinvest as long as possible because dividends and this concept of yield on cost and getting a really high yield on cost, that happens by reinvesting dividends. And that's that dividend snowball that everyone talks about. And the further I can delay into the future, delay that taking those dividends and using them for living expenses, the quicker my portfolio can multiply. So it's a temptation that I try to avoid. Let's keep going. As you can see on the screen in front of you right now, tip number 3. I like to focus on core stocks. I like to focus on those core stocks that are the brands that I see every day. I use them in my home. I see them out in the marketplace. In general, I don't like to have too many more than 20 stocks. Now, my portfolio's gotten out of hand. I have over 50 stocks now. But one thing worth mentioning, and I wrote down these stats before the video, my top 10 stocks make up 49.6% of my portfolio value. My top 20 stocks make up 75.3% of my portfolio value. My number 1 stock, Johnson & Johnson, is 8.5% of my portfolio. So whereas I own over 50 stocks, those core stocks, those top stocks make up the lion's share of my portfolio. And right now, as I go forward, as I buy more stocks, I think my patrons sometimes are probably getting a little bored because I just keep buying the same stock over and over. But I have to force myself. I try to almost make it a game. These top 10 stocks, these top 15, top 20 stocks, the ones I have the most conviction in, the ones that I will forever reinvest dividends back into the same company until that magical day where I'm living off of dividends, those are the ones, quite frankly, that I just want to focus on. And I've found for myself as a dividend stock investor, it's easy to get distracted. I found for myself as a dividend stock investor who has a YouTube channel that it's easy to get distracted sometimes and add too many positions to the portfolio. And so whereas I don't sell stocks, or rarely I do, once in a while I do, I sold one of them a few weeks ago. It's a very rare occurrence. But basically what I like to do is rebalance by just focusing on those core stocks. And after another, say, 5 years, for all intents and purposes, those top 20 stocks in the portfolio, it's really going to make up most of the portfolio. And I'm going to have a very long tail, if you will, in the portfolio. I'm going to have a long tail of other stocks, but they're going to be very small positions. And so I just like to focus on the core names that I see each and every day. And it's easy to get distracted. It's easy to watch a YouTube video and learn about a new company. It's easy to think, oh boy, it'd be fun to buy this new company. But I have to avoid those temptations and stay focused and make it almost a game just to keep adding to those stocks like Johnson & Johnson. That's a tip, at least, that I follow in my personal journey. Let's keep going. Tip number 4, as you can see on the screen right now, is basically I am totally convinced these days that I just need to focus on low starting yields. It's really funny. I almost try to find the stocks that have lower yields. And Whereas my portfolio average, I used to kind of average in the mid 3% range, and I used to go for some higher yielders, and sometimes I do in the sin stocks. I'm buying those from time to time, and they help even out the yield in the portfolio. They help bring some current yield. But these days, quite frankly, I'm going for the stocks like PepsiCo that tend to have lower starting yields. And the reason I'm doing that is I know the yield is secure. Dividend stocks as a strategy for me is not only about covering all of my living expenses, but it's about adding a layer of stability to my life. There is so much in 2022 we're seeing going on in our world. I just did a video I'll share in the pinned comment below in my last video where I shared all these alarming trends that we're seeing in our society right now. Boy, I just want to bring some peace of mind and some sleep well at night to my life. And the way I do that is through my investing strategy. And so what I've always found is by buying the best of breed dividend stocks with the lower starting yields, I'm getting those really solid payout ratios, the lower payout ratios. I'm getting dividend growth. I'm focusing on yield on cost. I don't need to have a huge dividend yield, starting yield right now, but I know with stocks like PepsiCo, if I just wait enough years, if I just reinvest my dividends for enough years, I will get a high yield on cost. And what this means is my starting yield is not the end all be all. What's the end all be all is how much yield I'm getting as compared to how much money I invested. And that magic happens through the dividend snowball, through adding more money, through dividend increases, and through reinvesting dividends. And so for myself, at least these days, whereas I used to kind of target an overall portfolio yield in the 3% range, mid threes, these days I'm really focusing kind of mid twos, because these days in this market, those stocks with the starting yield in the mid twos, those are the stocks I want to own. Those are the sleep well at night stocks. Let's keep going. Next tip I want to share, as you can see on the screen right now, is tip number 5. I'm kind of ignoring the news these days. I think Starbucks is the perfect example of this. Or I'm not only ignoring the news, but I'm using the news cycle in some ways to my advantage. I have learned in recent years that the news is actually used in many ways to kind of create fear, and sometimes the news can be used as a weapon in some ways to try and kind of cast doubt on a certain industry or on a certain company. And it's so interesting because Starbucks, there's a lot of negativity around unions. And for a while, I was getting maybe not concerned about unions, but it was really top of mind for me. These days, I'm not worried about unions. I kind of look at it two ways. One, maybe unions are actually a good thing. Many of my investors here on this channel, international investors, shout out to all my European investors. They were sharing that, hey, unions in Europe actually work out really well sometimes. And so that's the one way I'm looking at it. But the other way I'm looking at it is the total number of stores that have unionized in the Starbucks network so far are fewer than the stores that they open in any given quarter. Starbucks is opening more new stores in any given quarter than have unionized across the entire company. But the news would have made you think, whole company is unionized. Entire company is over. There's no future for the company. And so when all that bad news was coming out, you know what I did? I made Starbucks my number 2 position in my portfolio. And I just bought more shares today, by the way. My patrons already know that. I just keep buying because what's funny is this was all the talk about a month ago, but now fewer people are talking about the unions. You're not seeing it in the news as much. And you know what? The share price has been recovering. All that bad news brought down the share price. But now that no one's talking about that bad news anymore, the news cycle has moved on to something else. Share price is recovering. And so one of the tips, one of the lessons for myself that I employ all the time is when I see bad news, try to jump on it, especially if I believe the bad news is short-lived or the bad news is kind of fake or it's biased or it's not even really bad news. Because I know as soon as the news cycle moves to something else, the share price will recover. And it's one way that the market is inefficient. It's one way that there's opportunity for smaller investors like myself when this bad news comes out. Tip number 6, as you can see on the screen in front of you right now, the next one I want to share is I use dividends to get through difficult times. I'll tell you, I get stressed out sometimes. Today was a weird day. I already shared this with my Corner patrons. I have a Corner Patreon exclusive video that I filmed right before this one. I'm not going to go into all the details, but this morning was a weird morning. I lost my wallet. I found it, thankfully. I lost some important paperwork. I found it, thankfully. I wasn't really being very productive. I was having a hard time getting started. Now I'm being a little bit more productive, thankfully, filming these videos. But I use dividends as a crutch. I use dividends to get back on track. Buying dividend stocks is something I can control, brick by brick by brick. I just put in a little money at a time. I bought some Starbucks today. I bought some Johnson & Johnson as well. Patrons, you already know that. I do these actions. I use my dividend portfolio as something I can control. Whenever I'm having a tough day or a tough time, it's just a simple action of buying these stocks that can kind of get me back on track. Or let's say something really bad is happening out there or something that's concerning to me. I can always fall back and find comfort in the cash flow that comes from dividends. Like I said in my last video, I shared all these alarming trends that are happening in society right now, unfortunately, but at least I can rely on my dividends. And now I don't want to use a blanket statement that all dividends are equal. What I'm saying is I can rely on core dividend stocks, world-class dividends from companies like Starbucks. I'm sure there's a lot of high yielders out there, and I'm guilty of buying some of them over the years that are not quite as reliable as these lower starting yield stocks that have higher dividend growth rates. But as long as I stick to the basics, those core stocks, the great stocks, I do the boring stuff. I try to avoid the temptation to buy the high yielders. I try to avoid those types of mistakes. If I just stay focused on those core stocks, I know that's a crutch I can always rely upon, even when times get a little bit tough. I did a whole video, I'll link in the pinned comment, even for investors out there who feel like they kind of messed up their life or their life is on the right or the wrong track. I feel like dividends are something that are controllable. It's like building your own small business, if you will. Whereas most small businesses fail, I think dividend is almost building a dividend portfolio. It's almost a small business that can't fail. It's a small business that'll take a lot of time to reach scale where it actually has meaningful cash flow, but it's something that generally works if it's done right. I feel like that is a crutch that can be relied upon in modern times to completely transform someone's life or someone's day, just as it transformed my day this morning. Let's keep going. Next tip, as you can see on the screen in front of you right now, this is tip Number 7, I like to use mistakes as fuel. I like to be kind to myself. I like to remind myself there are no shortcuts. One of the great things about YouTubing is I've been doing this a while, and you all have seen right in front of you all of the great things I've done over the years, and you've also picked up on some of the mistakes I've made, and I continue to make mistakes to this day. I don't think there's any investor alive that hasn't made mistakes. Even Warren Buffett, for example, made some mistakes in recent years with his acquisition of Kraft-Heinz shares. And so that investment did not go how Warren Buffett was hoping it would go. Another investment that Warren Buffett had some troubles with in recent years was during the pandemic era, getting into airlines and the airline industry, and I know he made some mistakes in airlines. To this day, Warren Buffett makes mistakes. So as investors, myself and I would say everyone out there, it's important to give oneself some grace, because as dividend investors, there are going to be mistakes. I am going to get distracted from time to time. You all have seen hopefully mostly successes over the years here on this channel, but I'm sharing my journey for all to see. There are mistakes from time to time, and so I like to embrace those mistakes. I like to make sure that I learn from the mistakes. I like to use the mistakes to reinvigorate my strategy. Because of some of the mistakes I've made, that's why I'm so focused on core stocks right now, boring stocks. Over on Patreon every week, I'm buying the same stock. Everyone sees the same thing over and over. Thankfully, it's not the same boring blog post every time, because I like to provide some context behind it. I like to provide some info, what's going on in my life. But I am very focused on doing the same thing over and over right now, because I've learned from some of my mistakes, and I've used some of my mistakes as fuel in my strategy. All right, so I want to share another tip. This is tip number 8, as you can see on the screen in front of you right now. The important thing that I've done really well over the years that has helped me so much as a dividend investor is I like to do what it takes to hold on and avoid selling. That means having a solid emergency fund. It means not getting over deployed in dividend stocks. It means being prudent around recurring bills, about not having too many possessions that require a huge overhead that is higher than I can afford. Now, don't get me wrong, I'm going for a fat FIRE, so we've got a bigger home, we've got some cars, all of this requires maintenance, but I try to be somewhat conscious around controlling costs, and it's important because if day-to-day costs get too high, if I get too much money deployed into dividend stocks, I don't have an emergency fund, I can run a risk of having to sell dividend stocks. And the thing about dividend investing versus starting a business or a small business is dividend investing, I would say, is more likely to work than starting a small business. But the challenge with dividend investing is it takes a lot of time for it to come to fruition. It takes decades. The only way the dividend strategy works is to keep that snowball going, to hold on. The only way I can hold on is by avoiding the risk of selling. And the only way I can avoid selling is by having a cash buffer and having that emergency fund, not getting over leveraged, not having too many maintenance expenses in life. And so that is a really important tip that I like to remind myself about, especially because I like the finer things in life. We have a bigger home. I have a nice car. I like some of those things. And so I have to avoid those types of temptations because I know, quite frankly, the more I buy, it's not only about depleting the emergency fund. It's not only about taking money away that I could otherwise invest, but most things in life that I buy require maintenance. I was putting a tweet over on Twitter the other day that I think dividend stocks are the only thing that is a true asset I can buy that pays me money to do nothing. Anything else I buy, like a house or a car, clothing, they all require maintenance. They all require time. They all require money. And all of these are good things, by the way. If you don't have those things, you're not living life. But I'm just trying to say, I think dividend stocks are the only thing that require nothing of me. Let's keep going. The next tip, as you can see on the screen right now, is number 9. This is keeping the faith. This is where it gets hard for a lot of people, and I talked about this a lot in the early days of this channel. Dividend stock investing, unless you're going for a really lean FIRE, takes decades. And sometimes in the earlier years, it seems like it's progressing really slow, but that snowball kicks in quite a bit in the later years because of dividend reinvestment, because of dividend increases. But it's important to keep the faith, and it's important to keep the faith when times get a little rough, when times maybe the investor doesn't have as much money to deploy. Maybe it's a rough morning like I had this morning. It's better than give up on the strategy is to double down and keep the faith in the strategy and just put one foot in front of the other, brick by brick by brick, building the dividend stock portfolio. Tip number 10 that I want to share with all of you today, as you can see in front of you right now, is avoid buying stuff that requires maintenance. Boy, I just covered this one, so I don't need to go through it in too much detail again, but this is something that's really top of mind for me right now. One of the reasons it's really top of mind for me, as I mentioned, we're in a new home. When you move into a new home, sometimes you're kind of tempted to buy a few things. Sometimes you're tempted, hey, should we do some of these improvements in our backyard that cost a lot of money but would be really fun? I start realizing, boy, that would deplete our assets. It would take away some of that buffer in case an emergency hits, and it would require maintenance and money, ongoing money, which would require a bigger dividend stock portfolio to maintain the quote-unquote overhead of all that fancy fat FIRE lifestyle. At some point, you just have to put an end to it. You have to be happy with what you have. You have to realize that the ultimate luxury in life is time. And so I hope you enjoyed the video. Please go ahead and smash that like button if you enjoyed the video, if you've been around here a long time, if this video reminds you of some of the earlier videos. I was trying to do a little bit of a throwback today. I hope you enjoyed that. Also, don't forget to subscribe. I have more videos on the way over all the time, and I'm back 100% to full health. And so my video strategy, my video cadence is going to be right back on track. Before we go today, in terms of a full disclosure, I own the stocks mentioned today. I'm long Johnson & Johnson, ticker J&J, PepsiCo, ticker PEP, Starbucks, ticker SBUX. I am long Caterpillar, CAT, and Hawaiian Electric, HE. I own all those stocks in my personal dividend stock portfolio. Boy, today was a weird day. I was at Starbucks, and that's when I realized, hey, my wallet's gone. I was calling home. My wife couldn't find it. I had to leave Starbucks before doing any work there. Got home, found the wallet. Thank goodness. After all of that ordeal, I just got on my computer and bought some Starbucks stock. Got me right back on track as that tip that I shared in the video today. It works for me at least. In terms of a friendly disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. I'm just sharing my journey here on YouTube for fun and entertainment. If you're going to go out and invest in dividend stocks, stock market, please go ahead and consult your licensed financial advisor. It's possible to lose money in the market. The market's very volatile. I'm just sharing these tips today that work for me. These are my tips that I live by. I'm sharing my journey here on YouTube for fun and entertainment. I love you all. I look forward to seeing you in the comments below. Share in the comments below the tips that work for you as a dividend stock investor, and I will see you in the next video.
Reinvest.